Moody's is now the only major credit agency that still gives the U.S. a AAA rating. S&P downgraded the U.S. in 2011 during a debt ceiling standoff that rattled markets. Fitch followed in 2023, citing repeated debt limit crises and a lack of long-term fiscal planning. In late 2024, Moody's issued a negative outlook on U.S. sovereign debt. They pointed to several risks: persistent and large federal deficits, a rising debt-to-GDP ratio that's now above 120%, and political gridlock that prevents meaningful fiscal reforms. No downgrade is officially scheduled for July 2025, but growing tensions over the 2026 budget have increased market fears. Oxford Economics' Nancy Vanden Houten said, "Continued dysfunction in Washington could push Moody's hand sooner rather than later." Bloomberg analysts have observed that markets are already factoring in the risk of a downgrade. Treasury yields have been creeping up, especially on longer-dated bonds, as investors demand higher returns to offset perceived risks. A downgrade would mark the first time the U.S. loses its AAA standing across all major agencies. It could raise U.S. borrowing costs, spark volatility in equity markets, and shake confidence in global financial stability. We'll keep watching how this story unfolds, especially as debt talks continue. Stay informed for the latest updates on this critical issue.